Welcome. In this video, will ZBCN coin continue to rise sharply? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. The chart shows a remarkable and quite distinct uptrend structure. The price has touched this line more than once in the past while moving in the direction of this trend, and each time it has reacted upwards and continued its ascent. In particular, such trend lines should not only be considered as support or resistance in technical analysis, but also as part of a much deeper dynamic that represents the direction of the market and investor psychology. Ascending trend lines refer to periods when prices rise steadily, making increasing lows over time. In such trends, each new pullback ends at a higher level than the previous one, indicating continued buying pressure in the market. Within this structure, the trend line works almost like a substructure of the market. Seen as the buyer's line of defense, it becomes stronger and stronger as it is tested over and over again. Because each contact shows that market players care about these levels and create intense demand in these regions. Looking at the current price action, the price has touched this trend line in the past and reacted upwards from there, initiating a significant rise. This suggests that the trend line works not only as a technical reference but also as a psychological support level. Market participants see this level as a safe buying point and manage their risk by placing their stop-loss plans below this line. Such trend lines are extremely valuable for traders, because pullbacks to the trend line are often the areas where accumulated buy orders come into play and the price turns upwards. Therefore, it is very likely that a similar scenario will occur if the price approaches this trend line again. In other words, if the price reaches this important uptrend support again, it may face a strong buying reaction, as it has in the past, which could herald a new bullish wave. In addition, such trend structures are also very important for trend continuation. If the price manages to stay above this line, it means that the uptrend is still valid and buyers are dominating the market. However, if the trend line breaks, traders may need to reconsider their strategies, as this would mean that the technical structure has broken down. Therefore, monitoring these levels is critical both as an entry point and for risk management on possible pullbacks. In technical analysis, the likelihood of prices bouncing upwards when they touch the rising trend line again is quite strong in line with past examples. Such bounces, especially supported by strong volume, are not only short-term bullish, but also important signals pointing to the continuation of the trend in larger time frames. In the current situation, the price regained its upside momentum by making a strong bounce on its last contact with this line. This shows that the line is still active and is being carefully monitored by market players. In terms of prospects going forward, if the price retraces back towards this rising trend line and holds here, this time the reaction move could be even stronger. Because in technical analysis, it's not how many times a level is tested, but how it reacts after those tests. In this case, as the line successfully fulfills its function after each contact, traders' confidence increases, which strengthens buying pressure. Such trend lines need to be kept intact, especially to achieve pattern targets or to continue a major trend. For this reason, if the price approaches this line in the future, it would be a technically logical strategy to expect an upward bounce from here again. At the same time, volume movements at these levels should be carefully monitored. Because for a bounce from a trend line to be effective, not only the price must bounce, but also the buying volume must support this movement. But we cannot decide the analysis only with trends. Let's look at other metrics. Keep watching. A careful examination of the chart immediately reveals a prominent horizontal resistance level above the price action. Such resistance points are the levels where selling pressure has intensified in the market, which has halted the price's upward progress in the past. Usually at these levels, supply becomes stronger than demand, which slows or stops the upward momentum of the price altogether. Such horizontal resistance levels, in particular, gain strength as the price has reached and retreated from them several times before, making them closely watched by traders. In the current technical outlook, there is such an important resistance line just above the price. It is often unrealistic to expect such strong resistance zones to be easily crossed in a single move. This is because the sell orders accumulated at these levels are usually dense, and it is difficult for the price to absorb all of them the first time it touches them. Therefore, when the price reaches this zone, it is usually rejected in the first place and pulls back. However, these pullbacks do not always mean a continuation of the decline. On the contrary, most of the time, such movements are considered as technical and psychological breaks needed for buyers to regain their strength. Resistance levels weaken as they are tested over time. This is because each contact exhausts some of the sell orders waiting there. Therefore, when the price repeatedly approaches this resistance level, it is not only an indication of failure, but also a sign that the selling pressure at that level is gradually diminishing. This technical behavior is often referred to as resistance erosion. This means that the resistance zone becomes more and more vulnerable to breakout as it remains under sustained pressure. In the current situation, the price has approached or touched this upper resistance level. It may be quite difficult to break here on first contacts. But if the price tests this level repeatedly, the resistance level will weaken a little more with each new test. Especially if volume and aggressive buying comes into play in this area, the resistance level may eventually be broken and the price may throw itself above this level, potentially creating higher highs. In technical analysis, frequent tests of such resistance zones are seen by investors as a sign that a transformation is imminent. This is because each time a resistance level is tested, it represents the determination of buyers and the weakening position of sellers in the market. The time factor is very important here. Some resistances are broken suddenly, while others are finally overcome after weeks of testing. Throughout this process, traders should be patient and update their strategies taking into account both technical and fundamental data. Certain conditions often need to be met in order to break through resistance. These include sufficient volume, positive signals from trend indicators, and high investor confidence. At the moment, the price seems to be struggling to break through this resistance zone, but the lack of a breakout on the first attempt is a completely natural technical reaction. The important thing is to break through this level over time, and this is only possible through a patient pricing process. A close examination of the chart reveals a downward trend in the RSI indicator, which has been evident in the past. This downtrend structure indicated that traders had lost faith in the price going higher over a period of time, that the market was weakening in terms of momentum, and that selling pressure tended to increase. However, this pattern was not a bearish signal that would last forever. Over time, as the RSI broke this downtrend, the markets experienced a momentum explosion. Trend lines on indicators like the RSI are often as strong as the support and resistance on price charts. A downtrend on the RSI represents a continual pulling down of buying momentum, while a break of this trend indicates that the potential for momentum to move back up has been activated. In this context, an upside break of the RSI's falling trend line is not only a technical detail, but also an important indicator that the psychological threshold in the market has been crossed. This is because investors are now starting to believe that the market will turn from bearish to bullish, and this belief is directly reflected in the prices. After this breakout in the past, a visible bullish wave started in the price movement. This has once again clearly demonstrated the importance and impact of RSI in technical analysis. The breakout in the RSI has served as a leading signal of an upward movement in prices, and investors who follow this signal have serious earning opportunities. The RSI often reacts before the price action and is used by many technical analysts as a leading indicator for price prediction. In particular, when the RSI starts to move upwards after breaking a falling trend line, it reinforces the expectation that prices will move in the same direction. When the RSI breaks this downtrend, not only has a technical level been crossed, but also the overall dynamics of the market has changed. That's why RSI trends are important. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.